Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst, on Friday the 3rd of April. It's non-farm payrolls Friday. Normally we see a bit of a consolidation on payrolls Friday in the morning, but obviously a lot of volatility still playing out. Less so volatility than we have seen, I might add, but there is still this increasing recovery that we've seen in the dollar over the past few days. That continues to gather strength. Actually pulling gains across the major pairs actually. Little bit of a relative positive performance on the Canadian dollar, given the fact that oil price, massive swings in the oil price in the last 24 hours. That big move higher on the suggestion that Russia and Saudi were close to sort of coming to some sort of agreement on production cuts, and we've seen that that has caused a significant swing back higher in oil, and those gains are holding ground to an extent today, so that's helping the Canadian dollar. Elsewhere, you'd say that there's a slightly risk negative vibe going on. Certainly the commodity currencies underperforming. Japanese yen less negative than others, along with the Swiss franc as well. So yeah, slight risk negative look, but it's interesting that we have seen these equity markets just starting to settle down a bit as volatility is reduced in recent days, and we've got the S&P 500, which has sort of rebounded yesterday. A bit of a volatile session still, but less volatile again than it has been. But expected on the futures to be back lower again by 1% or so today. So we've seen similar sort of moves through the European markets this morning, following those US futures numbers. Gold is an interesting one. I'll talk about technical implications of the rebound that we've seen in the last couple of days. I'll talk about that in the video in a bit. But gold basically holding ground a little bit today, slightly lower, but again performing better relatively than the commodity currencies, if you take gold as a currency. So yeah, the big focus today is the data actually. We've got the services PMIs and the non-farm payrolls report today, and the big focus I think has been how badly the European economy is set to perform. I think China Asian services PMI 43, still very much in contraction mode, but not as bad maybe as it could have been, but still very much in contraction mode. But coming further forward into this morning, look at the European services PMIs. Spain 23, Italy 20 on the composite, French composite 28, 29, German composite 35, all missing estimates and underwhelming there this morning. UK data not so bad, 34.5, so comparable to the German data, but yeah, still pretty negative stuff there. Into the afternoon, I'll talk about payrolls in a sec, but let's just quickly look at the US non-manufacturing PMI 44, ISM non-manufacturing 44. So again, very negative. But big focus today is payrolls report. We saw yesterday the weekly jobless claims climbed above 6 million claims on the week. I mean, that is just incredible, sort of 10 million, there or thereabouts, 10 million claims in the past 2 weeks. Incredible numbers. And you're likely to see unemployment sharply spiking higher in the coming months, but maybe not so much today, because this data for payrolls today cut off, I think it's it was the 12th of March. So unemployment rising only to 3.8%, but some estimates are saying that's going to go over 10%, maybe even 15% in the coming months. In terms of headline payrolls, minus 100, again likely to come in much worse than that in the coming months. But yeah, minus 100, it's not all that bad. ADP the other day was better than expected, so it'll be interesting to see how payrolls does today. But wages holding up 3%, so that's the one positive really. Okay, so let's have a look at my chart of the day, which is the DAX actually. DAX has been just sort of edging over a little bit. Equity markets had this rally a couple of weeks ago, and that rally's just started to slip away slightly. And you can see this sort of succession of negative candles, and sort of suggesting that intraday rallies are being sold into. Slightly negative, but we are now starting to see stochastics crossing lower. RSI back under 40, MACD lines also not doing that great. So it's starting to edge into a more of a corrective outlook. Nothing too decisive yet, though. Look at this hourly chart that we have here, where if I just increase that slightly, see a better picture of obviously 10,137, key resistance overhead you need to take consideration of now. There was a breakdown yesterday, very slight basis of support, which again, sitting back towards now around that 9,455 level of these couple of lows that we saw at the end of March, which broke down yesterday intraday, rallied into the close, but just edging back towards that now. And I think if you close below that, it sort of edges a more negative outlook again. Yesterday's low of 9,337 is the support, but 9,200 was a breakout of a base pattern. I think if you saw the market below that, you really are turning much more corrective again. Just for now, it's still hanging on to arguably ranging conditions, and you can see the argument being, I suppose, above sort of 35 to 40 on RSI is still okay to an extent, but these indicators are putting pressure on now with the RSI turning over on the hourly around 50, MACD lines underneath, neutral stochastics bear crossing. So pressure is growing to the downside, but not decisively yet. As I said, a close below yesterday's low of 9,337 would just start to generate downside momentum again. So interesting outlook on the DAX as the selling pressure just begins to hint once more. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and you can go to our website where you can sign up for a payrolls webinar that we have today, but also our trading webinar, next one on Tuesday.